Hi guys, happy Saturday. Today we'll go through a trade recap of a beautiful trade that I took last week that I also posted in the Telegram channel. As you can see here, I will talk about this trade right here that I took on NASDAQ on Thursday. So here we are at Thursday's price action, and as a lot of you guys know, we always go through my points of interest and my draw on liquidities, my potential point of interest and potential draw on liquidities in the pre-market live streams. So if you haven't checked those out, these can be helpful. What I outlined in Thursday's pre-market live stream is exactly what I did on the lower time frames on Thursday. We can see right here I have outlined two fair value gaps. One that presented itself on Wednesday 9 a.m. and the other one at 3 a.m. and another one down here, which is from Tuesday the 17th of March at 9 a.m. And like I told you in the pre-market live stream, these could be potential support or kind of resistance areas, because when we go to the 4-hour chart, I told you in the pre-market live stream that we see already a lot of support right here that could potentially hold, and we could go to the upside, but also we could reject from this fair value gap right here. And when we drop down to the lower time frames, so now we are on the 5-minute time frame, and as you can see right here, we opened up at 9:30 and then we dropped lower and then we went higher again to take out this high that we formed at 9:30, traded exactly into this fair value gap that I've outlined to you guys. And then we drop lower to find support at this previous fair value gap again. And a lot of you guys know from my live streams and from what I've told you about my new strategy that I trade since 2026 is that I trade on the second time frame, on the 15-second, and that I use turtle soups. But you know, it really doesn't matter, to be honest, what kind of entry mechanism you use, as long as you know key levels in the market, as long as you trade with the trend and you can define your points of interest and draw on liquidities. Because even with my setups, if I only look at the pure mechanism of the setup, there can be losses. And the losses occur when I trade against the higher time frame trend and when I take trades that are not from predefined points of interest. So this is the most important part. It doesn't matter what entry mechanism you have. When you don't have this in place, then your setup, even if it's like a very, very high probability entry mechanism, it is going to fail at some times if you don't have the higher time frame or the drawn liquidity correct. So let's drop down to the 15-second chart and let me show you what I saw right there. What I did right here is align with time and with the higher time frame power of 3. We opened up at 9:30, then we dropped lower, and I was not interested in anything right there because we didn't really trade to a point of interest of mine, because my points of interest were, like I told you, above here and below here. And then I saw this drop lower. I wasn't interested. Then I saw this rally higher. And I honestly wasn't even opposed to taking longs as well. But since we didn't even trade into this fair value gap, which is a IPTA fair value gap, and if you don't know what that is, then check out my video on how to determine the bias. I've mentioned it there, and also just check out my live streams. I talk about a lot of stuff there as well. But yeah, then we finally reached to my point of interest, and I wasn't interested in participating as soon as we went up there, but I wanted to see us just wick inside of this point of interest and at the same time take out internal structure liquidity, which is this high right here, this one right here. So we took that out, and then one very important factor I want to see is that the wick that creates the turtle soup, the candle that creates the turtle soup, confirms that we will have a change in the state of delivery. So basically a bullish PD array that gets displaced to the downside and then turns into an inversed PD array. So let me explain. First of all, we have this fair value gap right here that I saw we displaced before we even made the turtle soup. And what also the turtle soup did is inverse this bullish candle to the downside and close below it, which also confirms to me momentum to the downside. So then I entered the position right after I saw this candle close at the next candle. So my entry was, I think, approximately right here. And I put my stop loss above this turtle soup. So now we got the entry and the stop loss. Then I looked for my first partial. And my first partial was based on the 1 minute time frame, which was the first presented fair value gap we created after the opening. So it would be this one here at 9:36. So then again on the 15-second chart, I took the first partial at this low inside of the first presented FVG from the 1 minute time frame. So that was my first partial. And then I was holding on to the trade until we traded into this previous FVG that I've outlined to you at the beginning of the video. So this was the whole situation, that was the whole trade. And you might think, how could I hold on to this trade inside of this consolidation? Well, first of all, it only looks like a long consolidation because we are on the seconds chart. You always have to keep that in mind. And I have a certain trailing stop loss strategy that I use in order to hold on to trades longer. I'm not going to go much into depth on this trailing strategy, but this is how my trade looked like and how I was managing the trade. So yeah, that was a short little recap of this trade from last week. And I hope you liked it. I hope it was insightful. And let me know in the comments if I should do more of those. And then we'll see each other in the next video. Bye bye!